What's going on, everybody? TG here, back with another video, back to disclose to you guys my new largest holding, Alibaba. Alibaba has been flying under the radar for a lot of investors for a long time now after the antitrust probe hit them in China, along with issues with Jack Ma and a couple other things, including the Ant IPO delayed. The stock has been absolutely crushed in the past 6 months and is now down almost 27% from 6 months ago and almost 30% from its highs. This stock is such a bargain right now, and the bad news continues to outweigh the good, it seems, and people are just not taking into consideration the fact that this is an amazing stock, extremely cheap, trading at only 25 next year's earnings. That is just absolutely insane. This is a growth company trading as a value stock, and is why Charlie Munger, the value guy himself of Berkshire Hathaway, disclosed a huge position in Alibaba worth $37 million, which is his third largest position behind B of A and Wells Fargo. See, they're talking about Alibaba being a value stock, and yet the fact is it's just not. Because if you look at it, its earnings last quarter were insane. Earnings per share of 22 versus analyst expectations of only 21. Revenue beat huge. Annual active customers were higher as well. And the cloud software of Alibaba achieved positive EBITDA for the first time. You know, just incredible that this e-commerce giant is successfully expanding amid the COVID pandemic and is becoming one of the biggest and best companies in the entire world. I mean, we go ahead and look at this thing, you know, it consistently is beating expectations with high profit margins, but yet the stock has not done much at all. I mean, even in the past year, the stock is really only up 9%, you know, whereas the S&P and other things are up huge. And like I said, off a huge amount from its highs. With a lot of things like the Jack Ma going missing at one point, the Ant IPO delay. Just a lot of bad news has come out. But this is actually my biggest position. If we go ahead here and look at my position in Alibaba, I have so much. I sold 3 puts on Alibaba for the 250 strike price and the 210 strike price for next year. This is for June and this is January. And then we have a ton of put credit spreads on Alibaba. We did sell some naked calls just to hedge ourselves a little bit, and we're up a little bit on that, but that's for next week. Just a simple hedge. But man, we are so deep into Baba, and you know, my account and some of the accounts that I manage for other people as well. You know, I like to put them into Baba as well because it's such a great company. In total, I'm risking, you know, $58,000 worth of collateral on Baba. Obviously, a lot more if you consider the puts sold, but you know, I really believe in this company. I've been doing so much research on it, and it just seems like all the good news was completely overshadowed by, you know, some of the bad news and the China uncertainty. And you know, that's one of the things that people talk about. It's the uncertainty of China that makes it, you know, such a risk. You know, if you can handle the China risk, you know, this will be amazing. This is such an amazing stock. You know, people are worried about potential delistings and, you know, different stuff like that. But, you know, Biden is very soft on China. He's not like Trump. And even under Trump, Alibaba didn't get delisted. So why under someone who is much easier on tensions with China, why would he go ahead and all of a sudden delist, you know, the national champion of China? You know, and you see stuff like this of, you know, obviously volatility in the stock, but recently the poor stock has just been getting absolutely clobbered. And it just hasn't been able to do much at all. You know, it was on an absolute tear in September and October, and then bam, the bad news happened in November, and then it happened again with the Ant IPO in December. But I think this is the bottom. I think we saw a bottom at 220, and you know, I expect this thing to go much higher. You have big people buying into Alibaba, including Kevin O'Leary. If you guys don't know who Kevin O'Leary, he's the Shark Tank guy. He holds a ton of Alibaba. He increased his stake in Alibaba by 61%. He loves Alibaba, and it's one of his biggest holdings. You know, they talk about it a lot, and they talk about how great of a company it is, but, you know, people are scared of the whole China aspect, and that's why they're ditching it. I mean, most people, you see a company with growth and scalability and profitability as Baba, and they would jump on it instantly. But since it has the China aspect, this growth stock can sit with a 25 PE ratio, and people aren't even jumping on board. So they have a big day coming up pretty soon about the annual report of 2020, where they're going to go into all the details, and they're going to probably give us some more information on the Ant IPO, because the Ant IPO didn't get canceled. It just simply got delayed, and Alibaba owns a 33% stake in that company. And it's going to be incredible in that IPO. It's going to be the biggest IPO ever. I expect this to go up. It hasn't really been going in the same direction as the NASDAQ recently. The NASDAQ's been performing really, really well recently, especially, you look at the NASDAQ from October, where is it, like right about here. NASDAQ's flown since then. Really, everything bottomed off in November, and then it's just been taking off. You've been seeing big cap tech as well, like Amazon, Apple, especially Apple, really skyrocket. It just doesn't stop going up. 130.62 now. It's an incredible growth from where it was just a couple of days ago. So obviously a great play for anyone who picked up Apple. We picked up a lot of Apple on the dip, and now we're just holding ours. We are hedging ourselves as well on some naked calls that we are down on right now, unfortunately. But I still think I should be safe by 140 strike price by April 30. We had $9 to play with. But as you guys know, I have a lot of Apple exposure as well. A lot of put credit spreads that we can make. So another like $2,500 we can make from that. And then a couple other ones as well. I don't know why these are only saying that they're 35 market value. That's obviously not accurate. But, we have a lot on the line for Apple and can make a good amount of money on this. So, I'm going to be watching it closely. I'm watching everything closely. But, Baba's my biggest position now. It was Amazon, but we sold that put. We locked in about $6,700 or $6,600 on the put that we wrote on Amazon when it flew. And now we're sticking all into Baba because Baba is the next play. If you guys are recommending a strategy on this, I definitely recommend put credit spreads. Their premiums are paying extremely well right now. If you go ahead and look at it, you're getting, just an absolute amazing value for Baba. You're putting up 12,000 to make 5,000, and it's out of the money as well. This is a 220, so that's a little closer, but that's still 8.5 points away. You also do a 210, 200, and get 40%. So it's a no-brainer to get at least a small position in Baba. But like I said, I'm extremely bullish on this company, and I wouldn't be surprised when this thing just flies right back to where it was, because it should happen pretty soon. You have a lot of good news coming out very, very soon, including the report of 2020, where they're just going to talk about how they absolutely crushed it and they're continuing to grow, and a lot of their side businesses are now becoming profitable as well. Especially that cloud. The cloud is huge. You guys see with Amazon's AWS, that's where all the profit comes from. It's going to be the same with Alibaba, and Alibaba is already extremely profitable, so you add that on top of it, their profit margins just go through the roof, and this company continues to just become cheaper and cheaper to buy, and then it's going to eventually fly. So we're going long term on it. As you guys can clearly see, we have a lot of these. It's January 2022. The earliest we have is November or September of this year, but that's a 210 strike price, 195 strike price. So again, we should be fine on this. I'm not worried about it much. But yeah, that's my biggest position is Alibaba. I'm extremely bullish on it, and I can't wait to see the future of it. So let me know what you guys think about Alibaba, and just China and those stocks, and let me know your thoughts on it, because I'm very, very curious. But yeah, I'm excited to see what happens with this. I'm definitely extremely bullish, and I don't think we go much lower than we have now, especially with a P ratio of 25. It's kind of hard to ignore a stock with a P ratio that low with the growth capacity that it's had. So anyways, guys, have a wonderful day. Let me know your thoughts on this, and I will see you guys in the next video. Take it easy, guys. Bye-bye.